really corporate America expecting Fed cuts here, and it seems like we're all but certain we're going to see 25 basis points next Wednesday. But it's all about the messaging, isn't it? What tone do you expect that Jerome Powell will actually take at the press conference?
I think you can get a good idea on the tone about the way they signaled the policy action. Chair Powell essentially told us that they would ease at his speech at Jackson Hole, but he wasn't really that explicit. Why? Because probably he has colleagues who are restive. And that suggests to me that it'll be a mixed message, a hawkish form of cut. With they cut the funds rate 25 basis points, but they signal with the summary of economic projections that at least some of them are not that comfortable with cutting much more.
Well, you talk about that restiveness. I have to imagine one of the factors there is that you have folks in the room who are being considered to be the next Fed chief, Vincent, and I wish I could be a fly on the wall, but it should make for a really interesting conversation.
Bad news is, been to 100 FOMC meetings or more. They're really kind of boring. It's the stuff on the sidelines that you'd probably be more interested in. But for the meeting itself, I think the core issue is you're exactly right. The people writing down their forecast in the summary of economic projections are doing it for a lot of reasons and not necessarily about forecasting the economy. They're signaling about their availability, if they are headed in the same direction as President Trump wants, i.e. much lower rates. They might, some of them also alternatively might be signaling about what they think an appropriate conservative central banker should do. That means they'll be signaling high rates. That suggests to me that there's going to be a very wide dispersion in the dot plot this time around in the summary of economic projections.
I am curious, though, when we talk about what is going to go on behind that room, and obviously the complexion changes, we're going to presume that Myron potentially might be in that room, assuming he gets the Senate confirmation. There's also the potential, depending on the court cases, whether Lisa Cook is going to be in that room. And now we're talking about the potential overhang of a public announcement for Jay Powell's replacement before, months before he's actually scheduled to leave. Does that make it harder, Vincent?
So it makes it harder for a couple reasons. Number one, it makes it harder to read the summary of economic projections because some of those dots are by people who won't be there. And some of those dots, as Katie suggested, are by people who are signaling about their availability for the top job that's not going to get filled. So the dot plot is less about a forecast and more about messaging. Second, it erodes Chair Powell's soft power. The way the chair shapes the committee isn't because he's got a lot of rule authority written down in the law. He's got soft power. He can influence the committee by promising that if you go my way next time, I'll really listen to you and I'll give you a front seat. I'll pay a lot of attention to you. Or he could be encouraging in lots of different ways. For him, his calendar pages are turning. He doesn't have as much soft power.
Yeah. I am curious to also, too, just about the synchrony or lack thereof between central banks right now. Earlier this week, we heard from Christine Lagarde. Of course, the big headline there out of her mouth, at least, was that the disinflationary process is over, which, of course, the market's meant to, interpreted that the rate cuts are over as well. Meanwhile, here in the U.S., we're potentially about to embark on a rate cutting cycle. Does that lack of unison matter anymore?
So it matters a lot if you're a holder of the foreign exchange currency, right? The foreign exchange of the dollar is very much influenced by the rate differentials. The differential sequence really does matter, although basically the dollar story over the last 9 months has much more been about tariffs, retaliation, and the U.S. attitude towards being the safe haven asset. So yeah, it matters at the margin. The big message to take away from that is central banks don't coordinate. Sometimes they move in together, but that's just because they're economies are all responding to the same thing. They look to their domestic objectives. They're going to go their own way if that's what meeting their domestic mandate requires.
And I hear what you're saying, that there's no lockstep here. Of course, it's not like the central banks are coordinating, but even still, you think about the impacts that the Federal Reserve's actions have. How much does what the Fed does on Wednesday and the meetings to come matter for the rest of the world?
Yeah, well, what did I said, they respond to their domestic considerations given the global economy. U.S. has an enormous footprint in the global economy, and sometimes what the Fed does gives them cover. Sometimes what the Fed does is make life harder. I think for the ECB, it's a little more difficult. If the Fed does something that would otherwise tend to weaken the dollar and strengthen the euro and make that disinflation problem a little more severe for President Lagarde.